Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:41 a.m. Central Time, and I'm recording this in preparation for the market day of June the 29th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into the key highlights from last night, and there were plenty of fireworks coming into the overnight. If you've not heard, obviously, Greece is back front and center in the news, and all the markets are down significantly as a result. When the S&P futures first opened, they were down around 40 points. They've recovered significantly from that, at one point over half of that. But at the time of this cut, the S&P futures were down about 24.5 points, or about 1.17%. Russell about the same. NASDAQ more steeply, down about 1.3%, and the Dow about 1.1%. In terms of the other markets, crude oil's up about 0.5%. The euro down about 0.4%. The bonds up big, and they were up about, at one point I saw, they were about 3.5 points up. They're up right now at about 2.1%, well over 3 points. Gold essentially is just a little weak, just down about 0.2. So in terms of safe haven status, not much move towards gold, but big move towards bonds. And indeed, bonds probably saw a bigger move than the drop of the indices. So that's kind of interesting, and obviously, given the current context of what's been happening in the bond market, is something of a counter trend move. But it does show, and I posed the question a couple of weeks ago, it's like, well, if indeed we're unwinding the bonds, will it still be safe haven if an event happens? Well, I guess this answers that question. It's still the safe haven, and it is the place where money will go if people are fearful. So they may be unwinding the bond market and maybe against a backdraft of that, but in the short term at least, people are willing to go to those bonds when they are fearful of putting the money in other places. Greece has also roiled other markets. China down over 3%. Hong Kong down 2.6%. Japan down almost 3%. Germany down well over 3%. And United Kingdom down about 1.6%. In terms of macroeconomic reports for today, really, frankly, technical analysis going into today, a list of macroeconomic reports, really is going to be all back burner. What's going to really be front and center is what's going on with Greece, and every little rumor is likely to cause volatility. Obviously, if they actually default and don't make a payment in the early part of this week, that will ripple through. We'll likely see something of a bounce and then probably more weakness, but then it really is going to be dependent on the intraday volatility created by the news and for the foreseeable future. You also have Independence Day, so we have a shortened week. The markets will not be open on Friday, and then on top of that you have the end of the quarter and then the first day of the month. So that has its own seasonality built in. In 20 of the last 25 years, the first day of the month has been a positive for the first day of July. So a lot of things that are going to be kind of roiling around. We'll likely see pretty significant volatility throughout the markets this week, and a lot of the things that you might have thought at the close of Friday may not be all that present to what the market reacts to right now. But in terms of U.S. macroeconomic reports, we do have pending home sales after the market opens. In terms of tomorrow, a lot of stuff on here. I had to kind of squish it, in fact, just to get it to fit on the sheet. We do have Chicago PMI, consumer confidence, are the primary ones for the U.S., but you see it's a busy slate all across the world. So depending on how you trade, you may find that some of these others get involved with your trading. In terms of current volatility, obviously leading into Friday is one thing. What happens this week could be very, very different. We, at the point of the close of Friday, short-term VIX was a 15.49. You had IV percentiles 25, 13, 25, 35, likely to see pops and all that this for today. We've had relatively lower, I should say, standard deviation move counts and so forth, with only 3 in the last 2 trading weeks. Very, very likely to see a standard deviation move being put in today. So that would actually take it to kind of normal 4 across the 2-week period. In terms of our regular daily report, a lot of things have been changing here. We're still phase 3. We've been at higher highs, higher lows going into today. We'll see just what the day brings and whether that changes. But change here, IBD status, uptrend under pressure, and this was before Greece. I've been wondering when they were going to change this. Obviously, the distribution day count has gone very high, and the S&P is at an 8, the NASDAQ is at a 6. And normally, when you get about 5 or 6, you see this uptrend under pressure be invoked. Accumulation distribution, S&P is a D-, NASDAQ is a C-, and again, this is before Sunday night's action. GMI index, a 5 out of 6. The intermediate term market posture is already bearish before Greece, so obviously this is going to continue down if this continues to hold the current levels. Buy side long portfolio exposure, now the opinion's called for 50%, and but based on the VIX, that opinion is still at 100%. We're still within the 12 to 18 window on the VIX. You see on the market posture, we have turned bearish. S&P at 63.5 and falling. Dow 48.2 and even weaker. NASDAQ, though, still holding on to very bullish, as is the Russell at 87.7. Notice the hedge warning status has changed to level 1, which is what we call breaking or yellow light. Certainly increased risk is present in the markets, and with Greece, that certainly will add to this for sure. Now, we had a number of different warning statements coming in to kind of create this situation. From our volatility area, market in decline has flagged, sharp increase has flagged. We have the distribution count, of course, obviously also very high. The new highs, new lows, look at this Friday, 454 new lows. So there were warning signs that the market was at increasing risk levels long before Sunday night. Also, in the intermarket risk aversion indicators, all 5 have flagged as risk off. So pretty significant amount of warning coming into Sunday night about current market conditions. But our current hedge warning status is now a level 1. In terms of special opinions, VIX is still inside the acceptable window, so it is okay to do option income strategies. Obviously, with today's volatility, you might want to stand back. Depending on how aggressive you are, there might be some opportunity to sell some premium down below the market once you determine that you think something of a bottom has formed. It depends on how you want to set that up, but at the very least, you're likely to see the VIX climb, and you need to include that in your criteria for the creation of any new option income positions. Covered calls, cautiously bullish in the intermediate term, though the short term obviously could present either opportunities to enter positions or some short-term, disturbance in the force of your covered call strategy. This has changed. We're now calling for a 1-to-1 distribution between in-the-money and out-of-the-money strikes, so a subtle change there. Put selling conditions are acceptable for a new core portfolio positions, but you've got to think about defined risk and consider the put credit spreads and scaling into positions until the market has confirmed a breakout from the trading range. And obviously I'm thinking in terms of a breakout to the top side. Now if we get a breakout to the bottom side, we will remove that opinion and update that. In terms of our relative rotation graph for this last week, this is just about as weak as it gets. You see long tails all coming down, and really the only thing that looks good at all is KRE, the regional banking index, and probably that is going to change with this morning's action. In terms of sector market postures, pretty much Christmas tree here. Really only healthcare, consumer discretionary, and retail were holding up nicely coming into Friday, but I suspect that this will be a sea of red after tonight. In terms of percent change, there was a number of sectors that were mildly positive going into Friday, but again, we're likely to see more red. And keep this in context. I mean, look at the 5-day, look at the 1 month, look at the 3 month. This has not been a highly productive market for the bulls for quite some time. So this action, while we'll be talking about Greece probably all week, and it will be front and center with our trading today, this is not a new development in terms of overall weakness in the markets and in certain sectors. So you should already be very well postured for this going into today. Well, that's probably enough for today. As always, greatly appreciate if you found us on the YouTube channel, liking us there. If you found us through Twitter, that you retweet us to your followers. Always greatly appreciated. Comments, of course, and other feedback can be sent into support@falconglobaltraders.com. And more information about all the things that we do and putting these principles into our daily practice can be found at this website. Performance Matters. This is updated through Friday, and we continue to see very nice performance coming in on the model position size year to date. Disclaimers as always, hit the pause button if you need more time to review this. And as always, we greatly appreciate you each and every trading day and the Falcon Global community. Good trading, and we'll see you back here before the market opens for our market preview tomorrow morning.